we are seeing a changing. Now, here's what I do know. You can also work from your apartment. So what survived COVID? Netflix, Zoom, Amazon. And why are you here today? Because what you need to have for those three to work is 4 walls and a roof. We haven't figured out how to live in a matrix universe yet. They put us all in a pod. When that happens, then we're screwed. But until then, you need 4 walls and a roof. All right, so what is the Great Reset? Well, not all recessions are built the same. In the last recession, we had the housing crisis. We had rents dying. People couldn't support their debt, but the debt wasn't moving. Now, rents are there, but the debt's moving. And there's 1.5 trillion that has to find a home. What does that mean? That means that the debt is expiring. That means that they have to refinance. And can they refinance at the same value, or are they going to take a cut? And that's what's occurring. That's what's hurting people. Short-term, middle-term maturing, rising overall expenses. Now, whatever reason, our insurance, I know, but from Florida to Texas, our insurance has doubled. Everything in the intercoastal has doubled. You know, that big hurricane, $50 billion, I might have a slide on here, hit Florida and just destroyed. We had ice storms in Houston every other year for the last 3 years. We're not prepared for that. This isn't New Hampshire, this isn't Connecticut. We don't know how to handle cold. Our pipes are not insulated. And they popped. And when they popped, it created water loss, havoc everywhere. Insurance, because insurance has gone up, they've raised your deductibles. I've had 2 apartment fires recently. None were covered by my deductible. Because my deductible was $100K. But it was a small fire in the unit and it was $90,000. So where's that come from? Cash flow. There are so many crazy things that you have no protection on today. So what's the reason why insurance is up is because people are like, hey, I'm packing up. I'll come back in a couple, 3 years. Texas, Florida, you guys are too hot. You're too volatile. And they're leaving a market for whoever stays. And they have to get their risk insured, so they charge you the right premium for them on their models. And it will stay like that until somebody that left a year or two ago gets greedy. Man, I'm sure missing. Look at those premiums, man. Oh man, I think we've recovered our losses. We're going to come back down and we're going to offer. We are seeing a changing. Now, here's what I do know. You can also work from your apartment. So what survived COVID? Netflix, Zoom, Amazon. And why are you here today? Because what you need to have for those three to work is 4 walls and a roof. They haven't figured out how to live in a matrix universe yet. They put us all in a pod. When that happens, then we're screwed. But until then, you need 4 walls and a roof. Catalyst for the reset. Rising interest rates. Rising property tax. Rising insurance costs and debt maturing. It means your term is over. Like mine was over, but I got 6 months extension. What does that mean? Reduce cash flow. Or dip it into your reserves. Oh, here's the other thing too. If your insurance goes up, your lender pays it. They're like, hey, Ashley, you don't have enough to cover your insurance. Please wire us a check, wire us the funds, and we'll pay the insurance. So it comes out of your reserve, $80,000. The lender owns the deal, not you. You leased it from the lender. Y'all agree with that? Right. So they own 75%. You're leasing it at a 4%, 5%, whatever it is. They want to make sure they have the insurance next time, because this is the new norm. So they will increase your escrow. So in your monthly payment, you have your insurance, your principal, your tax escrow, and your insurance escrow. It used to be $10,000 a month. Now it's $25,000 a month. That comes out of your number. That means that for me to own this apartment complex, this is my insurance. That means my NOI is down, and if my cap rates have moved up because interest rates have moved up, my valuation is lower. That's what's occurring right now. That's a massive, massive thing. So people are trying to refinance their debts and doing cash in refinance events. My second refinance, we basically did a cash in. But it didn't come from the investors. I got a preferred equity group, Harbor Group. And we got the deal across. They wanted 12 points. I tried to negotiate. I said, hey, you're lucky you got that quoting. We're asking more now. I don't recommend that option because now you have another devil that you have to serve there. 2, everything working with it is more expensive. The title company was more expensive. because they had more little bills. They want to protect their money more than what Freddie was trying to protect their money. They made us do other insurance endorsements that Freddie didn't require that cost us more money. I don't want to ever do that again. You know, I saw the effects of it, and it slowed down the process. So it is a process. It's a lot right now, and everybody is going through this at the same time. So I'm trying to tell you, this isn't one or two or three issues. It's always another issue. You got to have perfect operations, and not everybody's going to have perfect operations, and people are going to die. Their deals are going to go bad, and that's where you guys come in.